Hi, good afternoon. Welcome to the marketplace. Coming up, Bank of Ghana scales back foreign exchange intermediation program as it plans selling $800 million for the month of December. Also coming up, government statistician Dr. Hassan Idrisu calls for urgent steps to address the dwindling contribution of the oil and gas sector to Ghana's GDP.
It's important to address the sharp oil and gas decline and reinforce high growth areas like the ICT, the trade, transport, and agriculture sectors.
My name is Darryl Kwao. Thanks for joining us. Details coming up. And first up this afternoon, the Bank of Ghana is pressing ahead with its decision to scale back the volume of US dollars it sells in the market each month. The move forms part of the central bank's revised foreign exchange intermediation program aimed at streamlining supply and strengthening the FX market. More in the following report.
In October this year, the Bank of Ghana sold some $1.1 billion under its revised Forex intermediation program. This was carried out through the domestic gold purchase program, which had used funds raised to aid payments to businesses, debt repayment, as well as that of independent power producers. Now, that amount was reduced to $1 billion in November this year. But for the month of December, the Bank of Ghana is planning to sell up to $800 million for the market. The auctions will be done twice every week through the spot avenue. The Bank of Ghana is insisting that the decision to reduce the amount was influenced by the fact that there's always less demand for dollars during the festive season. The central bank, in a circular to the traders, argued that the subsequent market interventions will be determined by current market conditions.
Joining me on Zoom, Manager Macroeconomic Research at GCB Bank PLC, Courage Boutique. Good afternoon to you. So, the Bank of Ghana's interventions have coincided with a 31-year-to-date appreciation of the cedi. From a market perspective, how significant is this performance, and what does it tell us about the effectiveness of the FX intermediation program?
Good afternoon to you and your listeners, Darryl. We've been used to depreciation year on year, and so to record 30+% appreciation is a positive. We moved from around the mid-14s to the rate we see at now. We've seen that play through inflation. We've seen that play through the cost of goods in the market and the rate at which they are increasing. We've seen that play through other macro indicators, even the debt obligations, and then the total debt stock and all that. So it's overall been a positive. And this has been possible because, one, there was a decision to begin a domestic gold purchase program that's provided an avenue for government to ramp up reserve accumulation. And to the extent you have enough reserves, we're talking 10 billion or so intervention as of November, year to November, and we're talking about 800 million for the last month of the year. So some 10.8 billion or so, which is just about, slightly short of what the reserve position is at the moment. It tells you that the gold for reserve program and the domestic gold purchase program has worked quite well as a model, which now we must safeguard and then begin to now look at market sources and other sources of FX flows that can help build up that robustness so that we do not expose ourselves to commodity price vulnerabilities when they do happen and how that might impact reserve. So the strategy, I believe, has worked so far. It's a profitable market. It has introduced some predictability even for the Yuletide season, normally where you tend to see a lot of volatility. There is now a sense of predictability. That is what businesses need to plan. That is what consumers need to plan their lives around and their investment decisions and all that. So it's a positive. We need to build on from there and now move into the arena of diversification of our reserves and then, of course, our FX sources so that we do not expose ourselves to some vulnerabilities when commodity price eventually kind of give up on us.
So the central bank has scaled back December dollar sales to $800 million due to what we hear as a lower FX demand during this festive season. What sort of impact do you expect this will have?
Well, I think they're doing so this based on the data available, right? We do know that normally in quarter four, around December, most of the things we need to celebrate Christmas have been imported already, shipped in already. So the heavy liftings would have happened in October, November, thereabout. And then the settlement of the LCs to import these things normally start from January, February, thereabout, mostly in the first quarter. So the December period in itself doesn't hold a lot of liquid dollar demand on the market for most of these transactions because they would have been carried out already, right? So it is reasonable to think that demand has slowed a bit. Maybe things around oil import for the festive season, things around, of course, other normal demand around this period would be there, but the extra surge or spare coming from maybe festive season increment in the normal levels of demand would have been taken care of in October, November when the traders would have imported most of these things. So that additional layer of pressure would have been taken off, I believe. And that is why it is reasonable that they scale back as the data will suggest in December to take care of. So that we are not also dissipating our reserve for unsubstantiated or call it frivolous demand on the market, but we are targeting it at the needs of the market. So for me, it's expected. And my expectation is that maybe going forward, we will lighten the burden on the central bank's need to intervene on the market to now more market-based sources. And for me, that should be the next level in our FSM administration.
The Bank of Ghana has introduced a new FX operation framework aimed at reserve accumulation, reducing the volatility while remaining market neutral. How do you think this framework could impact on the city's stability and investor confidence in the months ahead?
Well, I mean, initially, that neutrality from the intervention point of view will cause some initial distortions. It's to be expected. You are coming from the point where the central bank is heavy on the market to a point where they want to move into neutrality in terms of interventions and all that, and only coming when necessary. It will cause some initial intervention. But that is exactly what I was saying when I mean we need now to move into more market-based solutions on the supply side, especially. And of course, the reopening of the domestic bond market, the offshore interest in there will come to help. We've seen a robust trade accounts also, especially on the export side of things, but we also see import growing. But there is a major challenge inbuilt there. You would see around the Yuletide that things around rice, local rice, I mean, years before there was huge campaign around this period for people to patronize local rice. Today, because of CD appreciation, it looks like imported rice is way cheaper. In addition to the economies of scale and scope that these producers enjoy externally, the exchange rate appreciation also means that they are a lot cheaper. And for most consumers of local rice, cost is not an attractive thing. Same applies to poultry. Same applies to afford a number of other things that originally our local market was trying to close the gap on. And so those are the levers that must be looked at holistically, the appropriate interventions provided so that we can cut down the import bill. Because you could see that, yes, import has been growing, but for the year 2025, the import bill as at October seemed to be quite a surge. And that is attributable to some of these dynamics or distortions being introduced by CD appreciation, which is a good thing in the first place. We all want the CD to be strong, but we must deal with the, if you like, the excesses that come with it. And once the bond market opens, offshore investors begin to coming a lot more, confidence improve, ratings improve, FDIs begin to flow in, then the more market sources of FX can be broadened, and then the reliance on central bank can be reduced. So the initial stage was introduce some distortions, but then ultimately the market should balance it out, and we should be fine. And I think the signaling effect of a robust reserve should give the market also comfort that things are a lot better than they were some time back.
Thank you so much, Manager Macroeconomic Research, GCB Bank PLC, Courage Boti. I appreciate your time on the marketplace. Now, the Ghana Statistical Service is asking government to take urgent steps to address the sharp decline in production recorded in the country's oil and gas sector. Releasing the third quarter GDP figures in Accra, government statistician Dr. Hassan Idrisu warned that the dip in petroleum activities is dragging overall industrial performance down. He explained that while some non-oil industry activities showed modest improvement, the significant downturn in oil and gas production threatens economic stability and revenue projections for the year.
And for government, it will be important to stabilize industry while scaling up support for top performers. It's important to address the sharp oil and gas decline and reinforce high growth areas like the ICT, the trade, transport, and agriculture sectors to keep the economy's momentum strong. So what this means is that the implementation of the programs and activities earmarked to support industrial growth, particularly in the oil and gas sector in the 2026 budget, is very key, and they should be implemented religiously to boost up industrial growth. This is a moment that households should actually be spending wisely and be saving more. And for businesses, our recommendation is to invest where growth is strongest. It will be good to shift capital and effort towards ICT, trade, transport, crops, and manufacturing, where we are seeing the most of growth coming from. And as I mentioned earlier, if you put these sectors together, they are driving over 80% of Q3 growth.
You're watching The Marketplace. We're taking a short break. We will be back with some more stories. And welcome back to The Marketplace. Director General of the Ghana Standards Authority, Professor George Ejei, says the success of government's industrialization agenda will depend heavily on strong private sector collaboration and the availability of robust infrastructure. Speaking at the inauguration of the Metrum Central Africa, he stressed the need to strengthen Ghana's analytical ecosystem to safeguard the pharmaceutical sector, food systems, and other critical industries.
Metrum Central Africa, a global leader in high-precision chemical analysis instruments, says establishing a local hub in Ghana underscores its commitment to advancing technical excellence in the sub-region. The new center will provide hands-on training, technical support, and applications development to help industries maximize the efficiency and accuracy of their analytical equipment. According to Director General of the Ghana Standards Authority, Professor George J., maintaining high standards across industries is not only essential for consumer safety, but also pivotal to Ghana's broader industrial transformation efforts.
Ghana stands at an inflection point. Our government's industrialization agenda requires robust quality infrastructure. We are moving the 24-hour economy, and we cannot do it without robust quality infrastructure. Our agricultural exports need credible testing to access premium markets. We know you are coming from Switzerland, and entering Switzerland with food products is not an easy thing. So we thank you for coming here.
General Manager of Metrum Central Africa, Foster Mensah, assured customers of consistent access to reliable, precision-driven solutions tailored to industry needs.
At Metrum, our mission has always been to provide reliable, precise, and accessible technical technologies supported by the highest standards of service and technical expertise. The establishment of Metrum Central Africa reflects that mission in action. It demonstrates our deep commitment to strengthening our local presence and technical excellence across 17 countries in Africa.
Suez Ambassador to Ghana, Benin, and Togo, Simeon Giga, noted that Metrum's decision to establish a presence in Ghana reaffirms the country's position as the preferred destination for investment and technological advancement.
Metrum is making a strong statement that Ghana is a vibrant center of innovation and a country worthy of long-term investment. This new presence will, we are certain, boost local capacity, bring specialized technical support closer to local laboratories, and empower researchers, industries, and regulators to conduct world-class analysis.
The inauguration of Metrum Central Africa marks a significant boost to Ghana's scientific and industrial landscape.
The Institute of Directors Ghana has cautioned against frequent changes of directors and CEOs whenever there's a change of government. President of the Institute, Mary Asariabwa, explained that retaining high-performing directors and heads of state institutions will be key to business continuity and good governance practices. She spoke to Joy Business at an induction ceremony in Accra.
The Institute of Directors Ghana has inducted 141 new members, 11 associates and 9 fellows, highlighting its role in promoting ethical leadership and good governance. The ceremony, held in Accra, gathered corporate leaders, academics and governance experts. Speaking to Joy Business, Mary Asariabwa, president of the Institute, cautioned against the frequent changes in boardrooms and CEOs with each change in government. She stated that retaining high-performing directors strengthens institutional governance.
One practice that we should really look at is the issue of once a new government comes in, then everyone else in a certain position may have to go. I think it's important that we look at those who are really performing, and the issue of color, meaning party color, should not really come to play. We should look at the individual, what he's capable of offering the country, what he's been able to achieve in the past, and be able to say that we do have a good person. He's actually the right peg in the right hole, and it's okay for the person to continue. So this is one of the things that, as good corporate governors, we really want to see.
She expressed optimism that stronger collaboration with government will enhance governance across state institutions.
As IOD, Institute of Directors Ghana, we actually collaborate with SIGA, and so our duty is to look at the areas where we think things are not quite there, and to continue to speak to those issues, advocate to those issues, and because of the collaboration, we do expect that the voices that we share, the advocacy that we present, will be looked at.
Inductees were admonished to promote sustainable governance practices in their respective institutions. The ceremony ended with a call for collective commitment to build resilient institutions and inspire public confidence, and contribute to Ghana's transformation.
And that's our program. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. Bank of Ghana scales back on FX intermediation for December, plans selling $800 million. We spoke about that today. Also, macroeconomic policy reforms, others correcting Ghana's path to attracting more investments, IMB investment report. That said, thanks for watching. We will be back same time tomorrow.